Hi everyone, Laurel Mintz here, GP of Fabric VC, and this is Oversubscribed. We get asked the question all the time about what you should be focusing on or what the expectation is in terms of early stage venture returns. Now, the truth is that early stage seed and especially pre-seed and sometimes even pre-revenue companies, it is a bit more of a crapshoot unless you have a diligence process like the ones that we've created both on the financial side and the marketing side to help really understand what's happening from a macro perspective. However, early stage venture returns, you're really focusing on startups that are developing products and are achieving or trying to achieve product market fit or have just achieved product market fit and are really focused on that kind of growth trajectory. It's important as a venture fund when you are investing early stage to understand the scale and size of the investments, the returns profile in terms of time and expectation. And one of the things that we realized very early on from the legal side is making sure that you can reserve what's called pro rata rights for future rounds so that your equity as you invest doesn't get diluted as these companies hopefully continue to raise subsequent rounds. But you really want to focus on making sure that, or we really want to make sure that we're focused on investing in companies that either have a strong product market fit or are solving a really interesting and unique problem and are the right founders to specifically do that. And the truth is that investments at that stage are a lot smaller or tend to be a lot smaller. The companies are typically raising, let's call it 1 to maybe 10, up to 10 million for a seed or a pre-seed round. Pre-seed's usually on that smaller side. And if you're a fund like Fabric, we're not leading rounds. We're making sure to come in and take the last checks to close out rounds or oversubscribe rounds with other funds that have done a lot of that diligence up front. So the investments are smaller because you're coming in earlier, and it's also a bit riskier. That's why a lot of people don't have appetite for venture because they are more risk averse. I always say when I educate folks about the venture asset class, it's about your risk tolerance and your age and stage, right? If you're a little bit further down that path and you can't wait 10 years for returns, it's probably not the right fit. But the exciting side of it is, it is a risky in an exciting way in my mind because you have so much growth potential. There is an opportunity for these companies to just be rocket ships. And we've seen quite a few of our companies already do that. In fact, super proud to say that almost 30% of our current portfolio has already raised their next series. In a 18-20 month period, that's pretty unheard of in terms of what they call graduation rate from one series into the next. But these companies have a higher growth potential, and that's really what they're prioritizing with the capital that they're raising in a seed or a pre-seed round. They've been talking along, they've found that product market fit, or they've found a really great concept and idea, and they need that additional capital to really scale those companies. And that's really what we're looking for. We're looking for companies that have an idea of how they're going to scale to that $100 million revenue rate, because that's when they're really attractive for some sort of M&A activity, their next series, hopefully up to an IPO potentially. But the truth is that those timelines tend to be a lot longer. You're investing early, and so that exit timeline and the timeline for early stage venture in general is 7 to 10 years. In fact, one of our early investments personally as an LP is actually on a 12-year horizon because of the pandemic. So there's a lot of economic headwinds and or tailwinds that can happen during these processes. But it's really, again, important for you to understand the baselines in terms of who and what you're investing in, the scale of investment that these early and seed and pre-seed stage companies are taking on, and what the growth potential and expectation in terms of your timeline of returns should really look like.